Hello everyone, welcome back to a new lesson. In today's lesson, we are going to talk about how to understand or how to know what sort of trend is going. So today's lesson is about trend confirmation. In today's lesson, we are going to learn how to understand what type of trend is going on in the market. In the previous lesson, we have talked about a little bit the basics of trends and we just touched the basics. Today, we are going to talk about a bit of advance and what things to do when there's an uptrend, what things to do when there's a downtrend, and what to do when there's a sideways trend going on. And we also going to learn some abbreviations. We are going to talk about what some naming that is generally used in books and in trading, that is called analogy, trading analogy. So let's get started. So normally first we are going to talk about uptrend, how an uptrend is made. So normally when the market goes like this, let's use the green color for better understanding. When the market moves like this, we call it an uptrend. From visual perspective, we call it an uptrend because it is going up. If we try to explain it from trading analogy, we will call it an uptrend because it is making more and more higher highs. What is an higher high? Higher high is a point which is higher than the previous high. For example, let me explain. This is a higher high. 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 Why it is higher high? If you mark it, you will see that this high, the first high, is lower than the second high. In easiest form, the second high is higher than the first high. The third high is higher than the second high. The fourth high is higher than the third high. So as you can see, every time the market is moving, it is creating a new higher high. So that's why we call this an uptrend. Okay. When the market, for example, let's say the market is going high, then high, then high. As you can see, the market is making higher highs, right? But in this case, market has made a new lower low. This is what lower low is. This is called higher high. This is called highs, and this is called lows. Okay, lows. So normally on an uptrend, we have seen the market makes higher highs, right? Here market has made an higher high. Here market has made an higher high. But if you look into it, you can see that in the uptrend, market makes new lower lows. This one is a new lower low. Why? Because this is a low, but this is a sorry, my bad. In uptrend, you can see market makes lower low, and this lower low does not cross this line, right? Does not crosses this line. But on the third time, as you can see, market has touched the previous lower low or might have made a new lower low. When this sort of stuff happens, you need to understand that the trend might be switching. The uptrend might has been the market has gotten the uptrend has gotten weaker. So this is something that when you see this sort of stuff, you need to get cautious because the market might be switching the trend. So normally it is easier to understand with this sort of drawing. Let me the draw an uptrend using the candlesticks. So we are so this we let's draw an uptrend. So this is an uptrend, this is an uptrend. Then let's say market makes a down, then from here market makes an up. So if we mark it, you will see that this is what market is doing. Okay, so as you can see, market is creating newer higher highs every time. So that's why we are calling it an uptrend. And as you can see, this lower low does not crosses the previous lower low. So this is a lower low, then this is a lower low, then this is a lower low. So in an uptrend, market should not touch or cross the previous lower low. In uptrend, market should create new and new higher highs as long as this is going. So let me write it down. In uptrend, market should always create new higher highs, and market should not or cross previous lower low. So this is how uptrend is made in a market. So now let's move on to a downtrend. How we can define a downtrend. Now let's talk about downtrend. To save time, I have already drawn what downtrends look like. So in downtrend, generally the market creates new lower lows like this. So the market goes down, it goes a bit up, then it goes more down, then it goes up, then it goes more down, then it goes a bit up, then it goes more down. As you can see, in downtrend, the market creates new and new lower lows. As you can see right here, in this section, the market is creating new lower lows. This one, this one, this one. And market does not process the previous higher high. As you can see, the second higher high did not cross the first higher high. The third higher high did not cross the second higher high. So as long as downtrend is going on, the market will create the new higher high lower than the first one. This is how it is. So for better understanding, I have created a downtrend. I have drawn a downtrend using candlesticks. As you can see, here is a seller candle, then comes two buyer candles, then few seller candles, then buyer candles, then seller candles, then few buyer candles. In downtrend, you will see more and more seller candles because seller candles makes the downtrend work, and seller candles creates new and new lower lows. And as you can see, none of these lower candles has touched or crossed the previous lower low. It creates a new low, and the higher highs does not crosses each other. And here is something in this pattern I have drawn something very interesting. If you can detect it, do let me know, like how you know that downtrend is almost at the end or downtrend is getting weak. Let me help you. If you carefully look at this section, you will see, although the market is creating new lower lows, the last higher high is very close to the previous higher high. The market is trying to go upward. The market is trying to create an uptrend. The market is trying to change its wave. From market is trying to change this downtrend into an uptrend. When it happens, you will see the higher highs are getting closer. As you can see, this higher high and this higher high has a very good distance. This higher high and this higher high has a very good distance. But if you look closely, this higher high and this higher high is a bit closer. When it happens on the opposite thing happens with uptrend as well. I am just giving you an example with the downtrend. As you can see, these two higher highs are getting closer. As more and more it gets closer, the uptrend will get weaker, and there will be a time, let's say, if this flow continues, then maybe there will be buyers here and there will be buyers here. Maybe there will be a red candle here, and after that there will be a green candle right here. So now if we continue drawing this trend, you will see that there is a lower low, right? But after this one, after this lower low, if the uptrend continued, there should be a lower low right here. But unfortunately, there is no lower low. The lower low has gone up and now it is here. And if we take the situation of higher highs, we'll see that this was a higher high, right? This was a higher high, right? The second higher high should be here, but it is not. The higher high went up from here to here. As you can see, this was a higher high, this was a higher high, then this was a higher high, and then the last higher high crossed to here. When a higher high crosses its previous higher high, you need to get cautious and you need to understand and you need to believe that the uptrend has ended. There is something that you need to understand, that when a higher high crosses its previous higher high, it does not mean that trend has changed. It does not mean that there is a trend reversal. Okay, so it this sort of stuff will happen in the market all the time. So don't get confused just because a trend just let me give you a better example. So when uptrend is going on, right, this is an uptrend going on, then this happens. Just because this lower low has crossed this lower low, it does not mean a downtrend has started. It just means that the uptrend might be getting weaker. Before you realize or before you take a decision that a trend has changed, you need confirmation. You need a confirmation, and the confirmation is a must. Without confirmation, do not believe. Without confirmation, do not believe that the trend has changed. This is very important. Most beginner traders do what they think or what they do is that when a new lower low happens and a new lower low crosses the previous lower low, they think, okay, now that there's a new lower low right here, the market is now will get down and down, but it doesn't happen. What market does, market goes a bit up, then goes a bit down, then most people think that okay, now the market will go down, so they change their strategies and they start to take strategies, or they start to take selling or uh, down trades. But what happens is that just after this one, the market simply goes up and you occur a loss. So this sort of unusual or this sort of sudden movement is what we call breakout. We are going to talk about breakouts and stuff in later videos. Let me show the same thing in downtrend. For example, this is a downtrend going on, right? This is a downtrend going on. Then suddenly market goes up right here, okay, and it goes a bit down. Now as a beginner trader, you will think that okay, as market has broken the previous higher high, which was right here, the market has broken and created a new higher high, you may think that okay, now the market will go up. But unfortunately, market just goes a little bit up, then continues its up, its downtrend, and it keeps going right like this one down. So I am repeating again that do not take any decision without confirmation. You need to have a confirmation, you need to have a solid confirmation before you believe that a trend has changed. This confirmation will help you to save money. There are many benefits uh, of using a confirmation before you take a decision in trading. For to start with, a confirmation will help you to take better trades. A confirmation will help you to make more money. A confirmation will help you to save money. A confirmation will help you to win more in the market. And definitely, a confirmation will help you to become a better trader. So, without confirmation, do not take any decisions. We are going to talk about confirmations as we progress in our video, in our lessons. And last of all, we have another trend. If you remember from last few videos, I have talked about it on my last video and the video before. There is another trend which is called sideways. A sideways market goes something like this. It goes up, then it goes down, then it goes up, then it goes down, then it goes up, maybe like this, then it goes down, then it goes up again, then it goes down. Do you remember what we have talked about in our videos, like how you can easily understand what type of trend is going on? Let me remind you again. If you think that it's an uptrend, what you need to do, let's test that theory with this trend that is going on right now. So do you think it's an uptrend? So let's draw a trend line. So if we draw a trend line, as you can see, it doesn't match, right? So it doesn't make sense. So maybe it's a downtrend. So let's mark it as a downtrend. It doesn't work. See, it doesn't matches. But if we draw a rectangle, it perfectly matches, right? So by drawing a rectangle, we have decided, or we have finally came to a decision that this is a sideways market. Okay. So let me show you how sideways market look like from candlestick perspective. So sideways market looks something like this. It creates a, let's say, a green candle, then it creates some red candles, then it creates some green candles, then it creates some red candles. Okay, it creates some red candles, then it creates some green candles, then it creates few more red candles, maybe one or two or maybe more. So if we draw a line, uh, we'll see the market is just going up and down. If we draw a rectangle, we'll see the market is going the market is going within this rectangle. It is not, it might sometime we have seen sideways market where the market breaks the rectangle sometimes, but then moves back in, maybe breaks it on top, but then moves in. So that's how sideways market works, and it is very easy to recognize. In the sideways market, it is better to take trades in a short time frame, because most of the time it becomes a very risky. There are strategies that you can take in the strategies you can implement in sideways market to gain profit from this market, but it becomes a very risky one, because most of the time in sideways market you will if you are doing binary trading, most of the time you will lose based on placements. We are going to talk about it later. I hope you understand how sideways market works, and if you are still confused about trends and how to recognize a trend, I would suggest you to watch this video again and again. If you have any question, if you have any question, please comment. I am trying my best to share my knowledge with you guys. So if so, this is your chance to learn from me as much as possible. I read about candlestick psychologies. I practice every day, and the knowledge that I have, because what I believe is that when you share your knowledge with people, when you teach someone the things that you have learned, it will help you to memorize better. And this is not only it's not like I only make these videos, I also watch it myself again and again. So it helps me to become a better trader, it helps me to understand the topics better. So that's how it works. So if you have any question, I would ask you, or I would request you to please comment. If needed, I will make a new video to explain that situation or explain your questions. So that's it about this video. In the next video, we are going to talk about some science, or we are going to talk about some things that will help you to understand more about trend reversals. Like there are some symbols, there are some candles in the market that gives you a sign that there might be a trend reversal coming. So I'll see you on the next video. Until then, take care and good luck.